Good evening, members. Members, before we start the program, sorry to let you all know that we have lost our senior member, CA Venkatesh sir, on 22nd January 2024. To pay respects, can I request all of you to stand up for a minute and then observe silence. Thank you, members. Once again, good evening to all. I welcome you all to this study circle meeting on the subject presentations before NFAC or CIT appeals. And to dwell upon this subject, we have our young and energetic speaker, CA Siddesh Gaddi, with us. And can I request our CICASA chairperson, chairman, CA Tupal, to escort the speaker onto dais and then welcome him with the logo. Thank you. Members, I have the privilege in introducing today's speaker. Siddesh Gaddi is a chartered accountant by profession. He is CA since 2014 and practicing since 2018. He is practicing in the field of direct taxes and he is mainly into tax litigation practice and has represented at various levels. His focus area includes transfer pricing and international taxation matters. He has worked as consultant with BMR and Associates LLP, litigation firm KK Chaitanya, Law Chambers, K Corporation Co. Audit Firm, and Gemini Professional Services Private Limited. He has assumed various roles at Karnataka State Chartered Accountants Association. He has been chairman of Representation Committee. He was mentor of Direct Tax Committee in the year 2021-22. Part of Executive Committee in 2019-20 and 2021. He was Chairman of Direct Tax Committee, Chairman of Leadership and Skill Development Committee, and Subcommittee Member of Direct Tax Committee. He is part of Central Taxes Committee of Federation of Karnataka Chamber of Commerce and Industry in the year 2022-23. He was co-opted as member of Research Committee and Exposure Drafts Committee at SIRC of ICI. He is actively associated with Bangalore's CA Toastmasters Club for over 3 years and was president of the club in addition to donning other committee roles for 2 years. Apart from CA, Mr. Siddesh is a budding lawyer and keenly following stock market for more than 14 years. He has co-authored articles on contentious issues in transfer pricing matters. He is regular visiting faculty at ICI Bangalore Institute and he has addressed more than 2,000 chartered accountants and more than 20,000 CA students. He has addressed session at Bangalore branch of SIRC ICI on provisions on section 68 to 69 D of the Income Tax Act 1961 on black money, demonetization and undisclosed income. He is also a regular visiting faculty at ICSI, CS Institute and GC Rao Academy. With this brief introduction, I present before you CA Siddesh. Over to you.
Thank you, Manjunath sir. A very warm good evening to all the members present here. Last time during COVID, I had this opportunity to present a paper before the members. Only about 5 sections. Went on for about 2 hours. If I refer to the Income Tax Act, the provisions will start from a page and end in the next page. Only 2 pages. Despite that, these provisions went on to dominate every other assessment order we got. Any cases on the sections that I am referring to? If that is not enough, every other assessing officer, the moment he is inclined to pass an assessment order, the most favorite section of assessing officer is this. Thanks to the very high tax rates. Any cases, members? It was also there in my introduction. Like section 68 to 69D. Hardly about 2 pages in Income Tax Act. If not for these sections, this topic would not have seen the light of its day. The way assessing officers invoked these sections and made huge additions, lot of cases got piled up before income tax commissioners, commissioner of income tax appeals. And today, again, my topic will revolve just around 5 sections and maybe 5 more pages in Income Tax Act. That is all it is. And my focus today, members, will be on legal provisions as well as procedural aspects in final appeal before CIT. And at any point of time, if you have any doubts, more than happy, please raise your hand. And if it is about CIT appeals, I'm more than happy to entertain. Yes? We'll begin with the relevance of this particular topic. As CA professionals, it is my humble opinion that CAs are very well placed when compared to other professionals, be it lawyers, CAs, whatnot. Well placed having prepared financial statements, well placed having filed ITR forms, well placed having filed tax audit report, various forms under the provisions of income tax. Having understood the nature of client's operations as well, having been exposed to assessment proceedings as well, why not take up CIT proceedings? After all, CIT proceedings involves just about 5 sections. And any hindrance, any challenge, any difficulty that you cite can be cured given time and efforts. This is the potential market has to offer. And secondly, income tax is 60-year-old. Income tax 1961 came into effect with effect from 1/4/1962, and in the year 2022 we clocked 60 years. Despite that, there is no end to black money, there is no end to litigation, there is no end to confusion or even interpretation of small provision. Forget big cases, even small provision you find it so difficult. So I am reminded of my guru when it comes to income tax litigation. Everybody's guru for that matter. The greatest advocate India had ever had, Nani Falkiwala. 30 years back, in the year 1991, he made a statement, a very startling statement. He said, Income Tax Act is a national disgrace. For a reason, for a very simple reason. He said it is because of the maddening confusion. Maddening uncertainty is the word which was coined by Nani Falkiwala. That was 30 years back. Imagine the amendments that have gone into Income Tax Act 30 years down the line. Despite that, litigation is never ending. A lot of potential market has to offer. We've seen waves of litigation in the recent past. We had a demonetization. Thanks to demonetization, the number of appeals that we got to file, record number. A colleague who is also into income tax litigation, during the course of last week, while we were waiting for CIT hearing, he made a statement that his office has filed 300 cases in the month of Jan 2020, post demonetization. The limitation for conclusion of demonetization assessment, after that is filed 300 cases. Huge thrust was given to income tax cases thanks to demonetization. If that was not enough, we also had COVID. Thanks to COVID, Great amount of restructuring was done in the department. We all know faceless was introduced. Limitation under various provisions were extended, so much so that it has given rise to a lot of litigations under the old reassessment regime. Even the transition from old reassessment regime to the new reassessment regime also has given a lot of litigations. This was the second wave. First was demonetization, second was COVID, third wave we are going to witness is new reassessment regime. Department, the way they are using EIS, Form 26 says, TIS information, I'm sure we are all experiencing that. This is the potential market has to offer. It may be assessee's plight, but for professionals, it is, in my humble opinion, some sort of opportunity. The third reason why we should sit through today's presentation, better pay attention, is huge pendency. Mumbai Chambers has filed a representation before Finance Ministry. As per Chambers, close to about 6 lakh cases are directly pending with CIT. This is the first stage of assessment, and 6 lakhs cases. It's a very big number, record number. The pendency is so much. Last time when I checked with Bangalore branch, I was told, last time when I checked with Bangalore ITAT, I was told that the pendency before ITAT is just over 1,000. Where is 6 lakh cases? Where is 1,000 cases before ITAT? Hardly anything. Cases have dried up before ITAT. And of late, every other day we are getting hearing notices with very short opportunity of being heard under section 250. And attempt seeking an adjournment 1 or 2 times, you end up with a negative order. File a response, you also end up with a negative order. This is how the trend has been in the faceless appeals. And lastly, otherwise these sections are not usually incurred by the Finance Ministry, but of late we have seen a lot of changes, starting with the introduction of faceless. Altogether, a new authority has been created called as Joint Commissioner of Income Tax Appeals. Department also has been very kind by increasing monetary limits. What is monetary limits? We'll deal with it as time passes by. The last reason is we got to be aware, or rather beware, of the powers that are enjoyed by CIT appeals. They are often referred as quasi-judicial authority. I would like to use a very small analogy to ease the tension in the room. A parent slaps a kid. Kid files an appeal before father. Mother slaps. Kid files an appeal before father, stating that mother has slapped. I am aggrieved by this act of being slapped. So what is that father has to do? Ideally, you expect a relief, because end of the day, appeal is to get a relief. Subordinate authority has passed an order, the lower court has passed an order, you file an appeal, go to a superior court and expect a relief. But what if father ends up slapping back the kid once more? So CIT, every time you go to CIT, don't be under the impression that you always expect a relief. CIT has powers of enhancement. It is very rare for an appeal authority to enjoy the power of enhancement. It is foreign to the concept of appeal itself. For these reasons, I find this topic to be of great relevance. Yes. The question that may arise is, the moment I get an order under income tax provisions, is it a birthright for me to file an appeal before any authority for that matter? The answer is no. Unless provided by Act, you don't have a right to file an appeal. The best example I can cite is 197 lower TDS certificates. Despite the fact that you are aggrieved, you don't have appeal mechanism. All that you can do is to file a writ or maybe consider 264. You can do that because Act provides for it. Section 246 to Section 251 deals with the scope, nature, limitation, otherwise with respect to CIT appeals. It is within this particular scope we got to operate my dear members. Law has clearly laid down the nature, extent and scope. It is a creature of statute. If your order, if it is under section 143, if it finds mention under section 246 or 246A, it is only then you can file an appeal. That is how it is. And at the end of the day, it is remedial in nature, it is to provide relief. That's the reason some sort of reasonable, practical, liberal construction has to be afforded to these kind of provisions whenever there is a doubt. And lastly, assessing officer cannot file appeal against his own order. Assessing officer cannot be aggrieved against his own order. If department has any issues with respect to the order passed by assessing officer, it is 263, it is 147, they can resort to all these sections. This is what I was referring to. This is a creature of statute. Statute provides for, under chapter 10, chapter 20, statute provides for appeal mechanism. Part A is what we are concerned with today, just about 5 sections. Part A of chapter 20 has 6 sections to be precise. Given the commonness between 246 and 246 capital A, we can merge those 2 sections for our discussion. 248 is no longer there in the operation. Finance Act 2022 has done away with the 248. You no longer can file appeal under section 248. 249 is dealing with certain procedural aspects. 250 is also there in play, and 251 will deal with everything in greater detail. The point is just about 5 sections, my friends. Just about 5 sections. And why not put in efforts to master these sections once and for all? There is part F to chapter 20 which deals with certain general provisions. We are concerned with section 268, otherwise other sections are not applicable to our case. Members, as I mentioned, demonetization, COVID, other cases has given a lot of spur to litigation. A lot of cases are piled up before various authorities, at least the CIT appeals. The pendency is very high. We have filed a good number of appeals in the year 2020, early part of 2020. 4 years have gone by, 3 years have gone by. Even to this date, the appeals are pending. No sign of hearing notice. And every 6 months, the assessees are blessed with a mail indicating outstanding demand. Assessees nowadays also get a call from DRC, Demand Recovery Center. And the moment they attempt to file a return of income, if it is a refund case, they call up person who has filed appeals and pose a question whether it will get adjusted. The moment they get a notice under section 245, the question is whether it will be subject matter of adjustment. Usually assessees pose a question as to when my appeal will get closed, when it will attain finality. My answer to them is simply making reference to the speech that was made by the Finance Minister in the House of Parliament while presenting budget 2023. That is also reproduced in the form of explained memorandum here. Finance Ministry has made it very clear that there is huge pendency. That there is huge pendency before CIT. That is the reason they are creating a new authority called as Joint Commissioner Income Tax Appeals. The new authority has been enshrined a lot of powers under section 246. This is how the section is arranged. 246 subsection 1 is what we are concerned with. The list of orders that can be appealed before Joint Commissioner Income Tax Appeals. Subsection 2 members is dealing with the transfer of cases from CIT appeals to JCIT appeals. After all, the purpose of creation is to ease the burden which is there on Commissioner of Income Tax Appeals. Subsection 3 is dealing with the transfer of cases from JCIT back to CIT. We should all appreciate that not all orders can be appealed before JCIT. There are certain orders which can be appealed only before CIT appeals. And if there are any connected matters which are pending before JCIT can be pulled under this section, section 3, subsection 3. And whenever there is a transfer of cases, an opportunity of being heard is given, which is very procedural. Subsection 5, I don't know how many of you have noticed, if you have received any hearing notice from Joint Commissioner Income Tax Appeals, it is not done in a faceless manner. The faceless appeal scheme has not been extended yet to Joint Commissioner Income Tax Appeals. We can still find a name, we can still find out the jurisdiction of the officer who is issuing the notice. Subsection 6 members is dealing with cases where the board can specify the orders which are not appealable before JCIT as may be specified down the line. Because this is a new authority under the provisions of income tax, consequential amendments have been made to various provisions. A ripple effect, which is very procedural, I will not spend much time. This is another set of sections wherein consequential amendment has been made to Income Tax Act. Powers have been given to JCIT to levy penalty as well. Coming to the main section, section 246, subsection 1, which is dealing with orders that are appealable before JCIT. A quick glance, starting off with intimation. Intimation is considered to be an order which is appealable. With respect to intimation, where assessee objects to making of adjustments, which is a very wide statement, assessee is objecting to making adjustments when compared to what is there in the next point. Members, if you notice, order under section 143 and order under section 144 can be appealed where assessee objects to the amount of income assessed. A fine difference when it comes to intimation, it is objection against making adjustments. When it comes to order number 143, it is objection against the amount of income assessed. Being the scope of appeal against 143(1) is very wide. You can not only agitate the adjustments to total income, you can also litigate TDS credit, TCS credit, relief under section 90, FTC being denied, anything and everything. As long as you find the moment intimation is issued, you find a table. On one column there is income as computed by the assessing officer, against which we also have written income. Wherever there is a difference, feel free to file an appeal under section 246 subsection 1 clause A. You all know that section 143(3) can be appealed, section 144 orders can be appealed, ex parte orders. The next on the list is reassessment, can also be subject matter of appeal before JCIT. TDS processing, whatever intimation you get under section 200 capital A. 201, where assessee is treated as assessee in default. 206C, subsection 6A, TCS processing. CB, TCS processing rather. And the penalty referred in chapter 21. 21 ranges from section 270 capital A to section 275. All these orders can be subject matter of appeal. In addition to that, any rectification or orders passed under section 155 in connection to whatever has been referred above can also be subject matter of appeal before JCIT appeals. Any doubts so far? Nothing much to break our head. What cannot be appealed before JCIT is something which is important. Whatever orders have been referred in the previous slide, otherwise appealable before JCIT. We are precluded from filing an appeal before JCIT if it is passed by an assessing officer not below the rank of JCIT. Any reason as to why this particular proviso has been inserted? Any reason as to why in the preamble of section 246 capital 246 subsection 1, why this particular rider has been inserted?
Same rank.
Same rank or superior authority. When they have passed an order, it cannot be subject matter of appeal before JCIT. Similarly, there are instances where with the prior approval of authority of a same ranking or maybe superior ranking, where is ranking provided under provisions of income tax? The officer's hierarchy is there in section 116. Similarly, third instance, specified cases, board has powers under subsection 6 to specify cases which should not be appealed before JCIT. And lastly, whatever is not covered in the previous slide has exhaustive list of appeals that can be, orders that can be appealed before JCIT. Anything apart from that, file an appeal before, maybe consider filing an appeal before Commissioner Income Tax appeals or otherwise. Am I clear, members? Next up is section 246 capital A. What we dealt in the previous slide is 246. This is 246 capital A. Apart from subsection 1, I don't see other subsections to be of importance. They were transition provisions from old authority. Subsection 1 is a very detailed section, has a very huge list of orders that can be appealed. I'll quickly go through it unless it is of importance. Starting off with the first item on the list is orders passed under tonnage taxation system. The second one is of importance, members. There is a reason why I have highlighted it in bold. I want a response from the audience as to why I have highlighted this particular item or maybe other items in bold. The second one on the list is orders against an assessee where the assessee denies his liability to be assessed under this act. There is no reference to section. It is open-ended. Any denial of liability, it can be complete denial or partial denial, can be subject matter of appeal by invoking this particular clause under section 246 capital A. It is very open-ended. We will discuss as to what kind of orders can be appealed under this particular section a little down the line. And no doubt we have dealt with 143(1), 200 capital A, 206 CB, whatnot, which can also be subject matter of appeal before JCIT. And the fourth one, order passed under section 143, if it is passed pursuant to directions of DRP, or if it is passed as per the order referred in subsection 12 of section 144BA. Subsection 12 of 144BA is dealing with GAR provisions, general anti-avoidance rules. Pursuant to that, if any assessment order has been passed, it cannot be subject matter of appeal before CIT appeals, neither before Joint Commissioner Income Tax appeals. Then where can it be appealed? How about order passed pursuant to directions of DRP? Where can it be subject matter of appeal? Anybody? Appeal lies before IT, because the DRP is a panel of 3 commissioners against an order of commissioner. How can you file an appeal before commissioner again? And with respect to GAR provisions, section 144BA, there is an approving panel of CIT appeals, approving panel of PCIT rather. And when PCIT passes an order, how can it be subject matter of appeal before CIT appeals? And few more sections, members, nothing much. With respect to orders passed under section 153A, whatever is in bold, by the way, whatever is in bold are the orders which can be appealed only before CIT appeals, not before JCIT appeals. We also have order under section 92CD, subsection 3, which is to do with APA, advanced pricing arrangement. And I'll jump to the last 3. Order passed under section 163, 170, subsection 2 and 3, which is to do with succession, otherwise than by death. Section 171 is to do with 171 is to do with what? HUF, partition of HUF. 201 is already covered in JCIT, 206C is also covered there. We have an order under section 237. Very nice section, I don't know how many of you are exposed. Anybody? 237? Order requesting for a refund, which is, if it is disposed against assessee, can be subject matter of appeal before CIT appeals. Section is no longer valid after 2019. You can seek refund only by filing a return of income. And last section is also of importance, so we will deal with it when we are dealing with section 248. Few more sections, members. This is to do with penalty. Last but second is to be remembered. Order imposing penalty under chapter 21. 21 ranges from section 270 capital A to section 275. Any and every penalty order. For example, section 270 capital A does not find any specific mention in any of these clauses which I referred. It can still be subject matter of appeal before Commissioner of Income Tax Appeals under section 270 capital A subsection 1 clause Q. Clause Q is what refers to chapter 21. These are the list of orders which can be appealed before CIT. If you get any order of assessment, grab hold of Income Tax Act referred to section 246 capital A. If it is referred there, file an appeal. Otherwise, a couple of other sections which are open-ended, consider there. A couple of clauses which are open-ended, consider there. Otherwise, you cannot file an appeal before CIT appeals. Am I clear so far, members? Any doubts? More than happy to entertain. Of interesting cases with respect to filing an appeal before CIT appeals. The first on the list is to do with tax auditors. Tax auditor reporting an amount to be something which is subject to disallowance, which has not been considered in the ITR. There is a processing of return done by CPC under section 143(1). The best example I can cite is ESIPF. Legacy litigation which has been put to rest by Supreme Court checkmate. Can this be subject matter of appeal before CIT? Can an SSC be considered as aggrieved, especially when tax audit report specifically disclose this amount to be disallowed? And CPC has just done the same. CPC has not applied its mind, it is a computer processing. Whatever is there in the tax audit report has been processed. Can this be subject matter of appeal is the question to the audience. The answer is also there on the screen. There is the Mumbai ITT ruling stating that yes, it can be appealed. The second example that I want to cite, the second case law of importance is assessee taking a stand in the return of income that a return income has to be assessed to tax. It is the assessee stand which has been processed either by CPC or by way of order under section 143 or 144, whatever it may be. Assessing officer has accepted the returned income. Can this order be subject matter of appeal before CIT? And if yes, under which clause?
CIT is on the powers.
CIT is?
On the count as the IT right.
Yes, powers is there, but can you file an appeal and lodge a claim before CIT stating that this income is to be excluded? Especially when return of income has been filed. Filed by whom? By the SSC. Form of verification is that DAC has been given, OTP has been given. You filed it, they accepted it. How can it be appealed? And if yes, under which clause? 246 capital A subsection 1 says, it starts off with this phrase called as an assessee being aggrieved by any of the following orders. How can you be aggrieved by your own act? Under which clause? I would like to go back to the clause. Very nice play with the words. The second one, which is listed on the screen, an order against the assessee, where the assessee denies his liability. The denial can be in part, the denial can be incomplete. You filed the return of income, but you denied it to be liable to tax. File an appeal by invoking section 246 capital A subsection 1 clause A. That is what even the court had to say in the case of 66 ITR. The third case is also the same. In the recent past, instead of referring to the case which is there on the screen, Bangalore ITT recently, while dealing with taxation of transfer of agricultural land, which was offered by the SSC in the return of income, the stand was taken by the SSC that it has been offered to tax under the mistaken belief. The ITT was very kind by invoking Article 245, 265 of the Constitution. No person can be taxed otherwise than by statute. They gave the relief, authored by Madam Bina Pillai and Chandra Pujari sir. The next set of cases is to do with admitted income. In the previous instance, we had a tax auditor reporting it in the tax audit report. We had an assessee filing a return of income, stating an amount to be taxable. Now we are dealing with different kind of admitted income. During the course of assessment proceedings, I volunteer before assessing officer stating that this is an amount to be disallowed under section 43B. This is a confession which I am making before the assessing officer. Against which can I file an appeal before CIT appeals is the question. The moment I file an appeal before the moment I admit something before Commissioner of Income Tax Appeals, the moment I offer something before the assessing officer by way of admission, in a way I am stopping assessing officer from causing further inquiry into my assessment. And how can I be aggrieved by the order where I have made an admission? Generally, appeal does not lie under section 246 capital A, but there are exceptions. The one which is listed in the second instance, where the particular admission has been made under a mistaken belief of fact or a mistaken belief of law. In such cases, you can file an appeal before Commissioner of Income Tax Appeals. The third instance which I want to refer is with respect to a case where assessment order has been passed with additions. You accept the assessment order by not filing an appeal before CIT appeals. You are accepting the guilt. Can you file an appeal against a penalty order which is on the basis of assessment order?
Yes.
Very much. In addition to the case law which is being cited here, 246 ITR, you also have very famous Karnataka High Court ruling. Any cases? Manjunath caught in greening. The next set of case laws which I want to refer is with respect to revision members. An assessing officer has already passed an order under section 143, which is considered as erroneous by the Commissioner of Income Tax. Only the Commissioner of Income Tax, not the appeals. So under section 263, it is considered as erroneous and prejudicial to the interest of revenue. So they give fresh directions to the assessing officer. Two types of directions can be given. One is the Commissioner comes to a conclusion that this is the amount which has to be disallowed. Only to quantify that particular sum, he is sending it back to the assessing officer, quantify the sum and disallow is the order by Commissioner under section 263. Pursuant to that, the assessing officer passes an order under section 143, read with section 263, disallowing an amount. Can we file an appeal against the order of Commissioner passed under section 263?
No.
Appeal against 263 can be filed before IT, which has not been done. Now we are in receipt of assessment order with an addition which has been passed under section 143, read with section 263. Can we file an appeal before CIT appeals?
No.
Maybe if the Commissioner of Income Tax order, whatever directions have been passed by the Commissioner, if it is not followed by the assessing officer, we can do that. But we cannot per se question the disallowance. If you want to question the disallowance, what has to be appealed is order under section 263, not the order passed under section 143, read with section 263. The second instance, the Commissioner has not framed his mind while passing order under section 263. The Commissioner has not framed his mind with respect to disallowance. He is sending it back to the assessing officer, asking the assessing officer to examine the nature of expenses and consider disallowing it. And if the assessing officer passes an order under section 143 and with section 263, can this be subject matter of appeal before Commissioner appeals?
Yes.
The answer is yes. So we got to be careful while dealing with orders under section 263. Similarly, Commissioner of Income Tax appeals passes an order The moment we get a favorable order, it is not that assessing officer's order will be accordingly modified. We have to approach assessing officer, file an application called as order giving effect. And assessing officer just gives an effect to the commissioner's order. Can this be subject matter of appeal before CIT is question? CIT has already passed an order. Only an appeal effect is given. Can this be subject matter of appeal before CIT appeals again? If the directions are followed, no grievance, file an appeal before ITAT against the order of CIT, not against the OG. If the directions are not followed, file rectification. If rectification is rejected, file an appeal against the rectification order before the CIT appeals. Is the answer from my side. We have reference to case law as well. There are instances where we approach ITAT. There is an order under section 144 by the assessing officer which has been by and large upheld by CIT appeals. We go to ITAT and give a reason as to why appearance has not been made before lower authorities. ITAT is kind enough to condone the act of the assessee. They send the matter back to the assessing officer for fresh consideration. Can this be subject matter of appeal before CIT appeals? Anybody? There is a 144 order which has been upheld by Commissioner Income Tax Appeals. We go to ITAT and cite a reason as to why we didn't make representation before lower authorities, including assessing officer. ITAT is kind enough to remand the matter back to the file of assessing officer with a direction to the assessee that be present when called upon, with a direction to the assessing officer to conduct a fresh assessment. Now, assessing officer passes an order under section 143. Subsection 3 read with section 254. Can this order be filed and can we appeal this order before CIT? Yes. Because it is a fresh assessment. Yes, appeal can be filed. Very interesting case. Even in the noon I was discussing this particular matter. A return of income has been treated as a defective. This is pertinent to assessment year 16-17. It is a pleasure to read this order. Very nice finding. It is quite similar to the finding given by Supreme Court in the case of Ashish Agarwal. Ashish Agarwal, anybody? Reassessments under the old regime were being done even when new regime was there in place. 90,000 cases. 9,000 appeals before High Court. Supreme Court said department cannot be rendered remediless. Let them continue the old reassessment as if it is taken up under the new reassessment regime. Something which was wrong has been allowed to be proceeded against. Similarly, 139(9) was invoked on an SSC when there was a difference between 26 years income and financial income. Gross income disclosed in financial statements. Return was rendered defective. You don't find mention of section 139(9) under section 246 capital A subsection 1, the list of appealable orders. Can we still file an appeal before CIT is the question? The answer by Pune Tribunal is yes. Under which clause again? You cannot just blindly go with this order of IT. Under which clause can we file an appeal? Anybody? We already dealt with that particular clause. Other clauses we just rushed it up. This clause. Which clause of section 246 capital A subsection 1? Where assessee denies his liability to be assessed under the Act. The Pune Tribunal held that assessee cannot be rendered remediless. So today, if I am in receipt of defective notice, we used to engage in some sort of jugaad by filing updated return, by filing condemnation before Principal Commissioner, which is never attended. The solution is here. You can try your luck by filing an appeal, which has been upheld by Mumbai Tribunal. There is authority to ruling of Allahabad High Court stating that you cannot file an appeal against 139(9). But this is very old assessment year 1994-1995, when this particular clause was not there in section 246. that ruling can be ignored, can be distinguished at least. Now reassessment, rectification and intimation, again interesting set of cases, quite similar to what we had discussed when it comes to revision under section 263. There is an assessment order which has been subject matter of reassessment. Pursuant to reassessment, pursuant to assessment, certain additions have been made. Pursuant to reassessment, few more additions have been made. Can I litigate, can I contest the additions made in the original assessment order is the question. Every order is an appealable order. If you want to file an appeal against 143(1), file it. It is a separate order, separate appeal has to be filed. 143(3) separate order. Even if it is subject matter of 147, you cannot contest the additions made under the original order under section 143(3). Ideally, you should file appeal against both the orders. Maybe before CIT or maybe before ITT seek for a corrective of appeals. Take it up together. Cases where there is no demand, it is not that only when there is a demand you have to file an appeal. Section 163, when a person is treated as representative assessee under section 163, even that order can be appealed. You should not wait for an assessment order to be passed with a demand. You can still file an appeal against him being treated as representative assessee. There can also be an instance where the request for waiver has been rejected under section 273 capital A. By whom? By PCIT or CIT. Pursuant to that, there is a penalty order which has been passed. For example, let's take 271(1)(c), old regime. Can this penalty order be subject matter of appeal before CIT appeals?
Yes.
So CIT has already applied his mind by rejecting a waiver application. CIT order almost in the form of penalty order, can this be subject matter of appeal before CIT again? Answer is yes. 273 is a different function of commissioner. Penalty order is independent, so you can still file an appeal before CIT. Few more instances of penalty orders. Order passed under section 270A because it did not find mention under section 246 capital A subsection 1. An assessee directly filed an appeal before ITT. Little did that assessee realize that the entire chapter dealing with all penalty provisions have been referred in what? Clause Q of 246 capital A subsection 1. So this 270A order, though it is not specifically mentioned, it can still be appealed before CIT appeals. And nowadays, the moment you receive assessment order, don't act upon it for 6 months. You are blessed with 3 more penalty orders. One is under section 271F for not filing return of income. One is maybe one or multiple penalties under section 272 capital A subsection 1 clause B. For what? For not replying to assessment notices. Each failure will bless you with 10,000 rupees penalty. And there are instances where assessing officer has passed 3 orders, levying penalty at 10,000 rupees each, 3 penalty orders. And then there is one more penalty order, maybe under section 270 capital A, whatever it may be. So at least 3 penalty orders and 1 assessment order. Client comes to us with a simple request, sir, ಏನು ಮಾಡ್ತೀರಾ ಗೊತ್ತಿಲ್ಲ, take care of my appeals. Imagine filing close to 5 appeals, that too for 10,000 rupees penalty. No doubt appeal filing fees is 250 rupees, but the amount of efforts that is involved, especially if the appeal is delayed, you also have to file condemnation application. And then this matter gets listed by way of issue of notice under section 250, hearing notice, BC, what a headache it is. So the point here is, every other order has to be appealed separately. Again, validity of assessment order cannot be subject matter of appeal before Commissioner of Income Tax Appeals. 273 capital A has been referred in the previous slide. 270 AA is dealing with immunity with respect to penalty under section 270 capital A. Despite the fact that immunity is rejected, you can still file an appeal before CIT appeals. Last part has already been discussed in the previous slide. A rectification order passed under section 154 against an assessment order. Again, this is the casual approach which I have seen among the professionals. There is already an order passed in the year 2020, which has not been appealed. The solution that is presented by a couple of professionals which I come across is, let us file a rectification application. Let us get it rejected. By getting it rejected, we get additional 30 days. And let's file appeal against that order of rejection of penalty, order of rejection of rectification. And also contest what? Contest the additions made in the original assessment order. This is not the solution. There are two different orders, two separate appeal ties. The appeal against rectification is very narrow. When I was with the Chaitanya sir, the first time I got an opportunity to prepare an appeal against 154 order, I had raised a lot of grounds or merits without a simple ground on the fact that there is no mistake apparent from record. That ground itself was not there. Chaitanya sir said, you still not learned how to prepare an appeal. So the scope of appeal against rectification order is very narrow, my friends. Very narrow. The next question, last question, is to the learned audience. There is an original assessment order which has been subject matter of reassessment, subject matter of rectification, pursuant to which we receive a rectification order. The original order has been appealed. Then there is more damage done in the rectification proceedings. Should I file a separate appeal, or should I consider additional ground in the appeal that is already there before CA? Anything can be done, either additional ground or a separate appeal, depending upon the quantum, how safe you want to play. 248 is also an appeal mechanism. We had a 246 dealing with the JCIT, we had a 246 capital A dealing with the CIT appeals. We now have 248 where assessee denies liability to deduct a TDS under section 195. He can file an appeal before CIT appeals. I'll quickly jump to the relevant part, whatever is there in the bold letter. If the TDS is being paid to the credit of government after 1st April 2022, this section cannot be invoked. The way this section has been planted in section 239 capital A, the power has now been given to assessing officer. It is assessing officer who will determine whether TDS is required under section 240, under section 195. If you are aggrieved by the order of assessing officer, you can file an appeal before whom? Before CIT appeals. Am I clear, members? So far? Anybody with questions? I'm more than happy to entertain. For the sake of it, at least if you can ask questions, I'll be happy. Anybody who's already exposed to CIT appeals? Anybody in this audience who has filed an appeal before CIT? Assessment proceedings? Anyways, section 249 is to do with form of appeal and limitation. Subsection 1 is dealing with the form and the fees. Subsection 2 is dealing with limitation, which is there with the provisions of income tax. 2A is transitional. Subsection 3 is to do with condonation. 4 is to do with payment of admitted tax or advance tax. Greater detail. Form of filing appeal, any guesses what is the form to be filled? Form under section? Form 35. If it is after 1/10/1998, irrespective of the date of initiation of assessment, if the assessment order has been subject matter of appeal after 1/10/1998, filed before CIT, 1/4/2023 filed before JCIT, even to this date, when you go to the income tax website, attempt to file an appeal, there is no distinction. You only get a section with a forward slash, either it is JCIT or CIT. There is no monitor limit, nothing as such. It's a common appeal. Just file one single form. It is internal thing. It is up to the department to either send it to JCIT or leave it to CIT. They both share the same powers. Again, two more rules. We had 6 sections in the previous slide. Few more rules of Income Tax Act, income tax rules dealing with the CIT appeals. The last aspect is of importance. The person who is authorized to verify the return of income under section 140 is also the person who is authorized to file or verify form 35. It matters especially when it comes to appeal in the case of a company. It is MD alone who has to sign the form 35. If there is no MD, at least when it comes to ITAT proceedings, we file a document called as an affidavit stating that there is no MD and that a director has been authorized, this particular director has been authorized to file ITAT appeal. Neither MD nor directors, a person as may be authorized. But to be mindful, otherwise the form will be rendered defective. Form 35, TAC, EVC and all, I'm sure members will take care of it. It is as similar as filing a return of income. The document to be accompanied along with Form 35 is duly filled Form 35 along with grounds of appeal and statement of facts. The order that is appealed against, a notice of demand is of prime importance. We will figure out as to why. Payment of appeal filing fee also has to be done, and lastly, if it is an appeal against penalty order, even the relevant assessment order has to be attached. There is a limit on word count when it comes to ground of appeal and statement of facts. The jugaad which we do is we put it in Word, convert that word into an PDF and give it as an attachment. Don't have to struggle with the form which is given to you. Attachment size, you cannot take care of it. There is a notification which is mandating that all the appeals needs to be filed online. It is mandatory, otherwise it is not entertained. End of the day, where will you go and file an appeal? So in the sense, if it is a manual appeal, where will you go? Where is CIT? As per faceless, we are not supposed to approach CITs. There are only 3 CITs, there were 15 CITs in the past, I would like to believe. We are left with the 3 CITs, CIT Appeal 11, Queen's Road, who sits over, who takes care of orders pursuant to search. We have CIT 15, who is also blessed with additional powers to deal with the search matters. We have CIT 14, who is dealing with international taxation and transfer pricing cases. Only 3 CITs are non-faceless, other CITs are faceless. When I first came to CA Institute to apply for CA CPT, little did I know as to how to fill the form. I was a little lost in the crowd. A person who was seated next to me said, just ensure that the DD is drawn properly. Everything else can be taken care. So I didn't have photo. I got a hall ticket with a letter stating that the photo has to be certified by the principal. So everything can be taken care as long as DD is done properly. Similarly, even if you violate the provisions of Rule 45 dealing with a lot of requirements when it comes to filing of CIT appeal, CIT cannot reject it. Why? Because this provision is remedial in nature. Practical, reasonable interpretation has to be given. At the max, CIT will request the SSC to cure the defect. 1 or 2 opportunities will be given. Despite that, if you are not doing it, if you are taking it for granted, then CIT can as well reject that particular appeal. Members, this is of importance, a statement of facts. This is an art as well as a science. An art because some discretion of the person who is preparing the document will be involved. A science because end of the day, it is a statement of a fact. What is a fact? Something which is undisputed. The typical question which you get when you meet a Commissioner of Income Tax Appeals with a case, the first question he's going to ask is what is the assessee is doing, the background of the assessee. He is into this and this business, he is drawing this and this income. His filed return of income on this and this date, disclosing this much income, this is the refund. The background of the proceedings, starting off with a notice under section 143(2), notices under section 142 subsection 1, if it has been issued, and if there is any grievance with respect to the short notice, lack of opportunity of being heard, all those things can be put in the statement of facts. Give a very nice history of the proceedings which have already taken place before the assessing officer. The third important thing is with respect to the additions that have been made. While dealing with additions, especially when it comes to the statement of facts, members ensure that you don't express your grievance, you just lay down the facts which are relevant to the addition at all. Only with respect to the addition, lay down the facts, no grievances. Grievance can be dealt in what? Grounds of appeal. And ensure that whatever you detail in the statement of facts, it is relevant to the additions. And more importantly, the most important thing here is, this is the last opportunity for an assessee to present facts of the case before an authority. This statement of fact will be carried forwarded to ITAT. When you file an appeal before ITAT, you only raise a ground. So, as simple as that. You don't give a statement of facts. When you go to High Court, you cannot whisper facts. It's only a question of law. When you go to Supreme Court, so this is the last opportunity for an assessee to present statement of facts. This can also help assessees when it comes to raising additional claims, raising legal grounds, etc. We'll deal with that in a greater detail down the line. Should not contradict the grounds of appeal. There was an instance where I had prepared an appeal. The stakes were high, client wanted second opinion. He approached another CA professional. I have a lot of regard to that professional. He went through my document, he presented a feedback, very nice feedback, which changes the approach of a professional altogether. He said there is a ground in grounds of appeal stating that there is lack of proper service of notice under section 143(2). And then he says there is also the statement of fact where it was casually said that notices under section 143(2) has been issued along with notices under section 143(1). On one hand, I am saying that 143(2) notice is not issued. I am raising a ground, very important legal ground. On the other hand, I am in the statement of facts and casually, it's a copy paste. So to be frank, stating that the notice has been issued. Anyway, thanks to the nice feedback, I realized the importance of statement of facts. There is an opportunity to bring new facts. Why new facts is of importance? There is a rule called as Rule 46 capital A dealing with additional evidence. We cannot casually submit anything before CIT unless it is not submitted before assessing officer. We can do that as permitted by Rule 46 capital A. We will deal with that in greater detail and make appropriate reference. Coming to grounds of appeal, it is just when I started a small analogy, if I can deal with it for a change. Just when I started learning public speaking, by going to forums like Toastmasters, otherwise, the Income Tax Act introduced faceless scheme, wherein you are not supposed to go to public forum. Even ITAT is going to be faceless. The deadline is 1st April 2024. Just when I started learning how to draft grounds or how to be creative when it comes to return submissions and otherwise, we had ChatGPT. So it makes me wonder whether I should be learning IT, income tax, or whether I should be learning IT, information technology. Anyways, so grounds of appeal utmost important. At least I started off learning how to draft grounds by referring to orders which are there in public domain. Every other ITAT order is put up in the ITAT website. High court orders also can be assessed. Taxman is there, tax sutra is there, tax scan is there. In most of the cases, ITAT reproduces the entire grounds of appeal in the order to start off with. Then they go about dealing with grounds in a ground-wise manner. So that is one source through which you can learn how to draft grounds of appeal. But ensure that all possible grievances are placed before an authority. All possible. If an addition has been made under section 68 for having deposited cash into the bank account, the first ground will not be on 68. The first ground will be generic, stating that the assessment order is bad in law. As simple as that. Given the weight of the facts, merits, the assessing officer has erred in passing an order which is prejudicial to the interest of the assessee. To the extent it is prejudicial to the interest of the assessee. It can be a simple ground to start off with. Second ground, which I always make it a point, is assessing officer lacks a jurisdiction to pass an order against an assessee. Tomorrow, when you go to ITAT, when you raise a ground before ITAT saying that assessing officer lacks a jurisdiction, the ITAT should decide it then and there, considering the fact that you already raised the grounds before lower authorities. If that is not the case, ITAT can always send it back to the file of CIT to first adjudicate on this legal ground and then come back to ITAT. So legal grounds, generic grounds do consider in the beginning, then get into section 68. Section 68, as simple as the assessing officer has erred in making an addition to section 68 to the extent of rupees 10 lakhs. Assessing officer has failed to ensure that the conditions referred in section 68 are satisfied before invoking section 68. Alternate grounds can also be considered. What can be alternate ground when it comes to cash deposit? The best possible legal ground and alternate ground when it comes to cash deposits, anybody? P credit. Assessing officer has failed to consider previous cash withdrawals. Assessing officer has considered only the credits in the bank account. All this can be explored. Ensure that all possible grievances are raised in a very crisp, cryptic and non-argumentative manner. The moment the ground of appeal exceeds the third line, it is prepared by an amateur, in my humble opinion. Legal grounds, grounds on facts and procedures. What can be grounds on procedures? Anybody? What is it? Grounds on procedure is with respect to time, is it? Time is grounds on legal point, limitation. Procedure is with respect to maybe short notice. You get a notice Friday 6 o'clock with a show cause notice that addition will be proposed if you don't reply Monday 10 o'clock. Can be a procedure. Non-issue of VC notice, video conference can also be grounds on procedure. Computational errors, though it can be subject matter of rectification under section 154, it can also be subject matter of appeal. Raise a ground to that effect. Consequential penalty, though it is a separate proceedings, should consider raising a ground. Lack of opportunity is also of importance. It will help you to get additional evidence admitted. Grounds should be numbered, members. I don't know if you are exposed to ITAT proceedings. ITAT, even if you try to start off with a story, background of the case, ITAT will stop you, ask you to take up the ground number 1 first, move to ground number 2, then start a story. So, grounds should be numbered. It helps you to conduct yourself before the appellate authorities. Should case laws be cited before authorities by way of grounds is the question to the learned audience. Question mark says it all. Cite it or don't cite it, it's okay, but grounds should be such that you should have a liberty. Today you cite Shabri Enterprises, tomorrow you have checkmate. Anyway, last is alternate grounds. Alternate grounds we already discussed. You're taking a main prayer that 68 should not be done. Even if you want to do section 68, P credit. Any questions so far, members? for the sake of it, I'll be happy if you can ask some questions.
Can you file an appeal without having order?
Yes, lot of tedious notices. We don't get to know whether intimations have been passed under section 200 capital A. Lot of instances where assessees come to us not with a copy of order, not with a copy of demand notice, not with any other document. They come to us with a recovery notice. Recovery notice will give details as to where which assessment here or demand. So an appeal can be filed when there is a notice of demand. It's the most important document. Then comes assessment order or penalty order. So ideally not possible, but in the interest of time, if you are finding it difficult to get a copy of order from the officer, there is a section called as section 268 which exempts, which gives an exception to the limitation, stating that the moment you apply for a certified copy, till the time you get certified copy, it has to be excluded while computing the limitation. So wait for it. As a reply to the recovery notice, ask the assessing officer to provide certified copy. Also intimate the assessing officer that the moment you receive a copy of assessment order, you would like to invoke section 268. From there starts the limitation 30 days to get a liberty. So most of the tedious notices, I don't know where 200A can be downloaded. It's a big headache. You get acknowledgement number, whatnot. So we don't spend a lot of efforts in downloading 200A. We reply back to the assessing officer. You provide us a copy. In 30 more days, we will file appeal. Thank you for the question. Return submissions, the most important piece of document to be filed before CIT. The moment client comes to us requesting for a duly filled form 35, requesting us to file an appeal, we can do it in a day, less than a day. But preparing return submissions, expounding the grounds of appeal takes at least a week, if not days. The most important, I'm sure, a little bit of time efforts will be able to do it. Ground-wise submission has to be done. There is a unwritten law. When you raise legal grounds, when you also raise grounds on merits, grounds on law has to be entertained in the first instance. Only then a commissioner can go to grounds on merits. Third point is additional ground, additional evidence has to be a separate document. Cannot be part of the same paper book. Case laws, instead of just casually referring to case laws, also consider giving a case law compilation. Again, some time, efforts and money on this, you will be able to prepare written submissions to support the grounds of appeal. Dealing with section 249 subsection 1, with respect to appeal filing fees, the maximum that you are required to pay is 1,000. Certain things that can be taken care is the challan that you fill has to be self-assessment tax. When I was with Chaitanya sir, when I was in BMR, there was some referencing standard. We used to send a document along with appeal. Client used to pay 10,000 rupees as a IT filing fees. When I got into practice, I had to do everything all by myself. The first appeal that I filed, I had paid the appeal filing fees of 10,000 rupees as regular assessment tax. And I had got a defective notice. I couldn't face the client. I prepared a challan correction form, went to the assessing officer, begged him to change the challan, went at least 10 times because it's a matter of 10,000 rupees. A person in the first month of practice. Anyways, it is self-assessment tax. And you get tax, you get interest, you get penalty, you get others. It has to be paid under others. Otherwise, it can be treated as defective or you have to pay it all again. I'll not spend much time on the table, my friends. On the limitation section 249 subsection 2 is dealing with it. 30 days from what? 30 days from the date of payment of tax if it is an appeal under section 248. 30 days from the date of service of notice of demand. It is not assessment order. If you get an assessment order without a notice of demand, what is that you do? An assessment order without a notice of demand. It is purely academic. Notice of demand is not there, only an assessment order even with 1,000 rows additions. Like Madam Nirmala Sitharaman said, notice without bill, tear it and throw. Order without a notice of demand, the happiest you can get. Unless you get a notice of demand, you cannot file an appeal before CIT. What is important here is 270 AA. We had referred to this section a little while back. 270 AA is dealing with immunity against penalty under section 270 capital A. The time that is involved in filing immunity application till it is rejected can be excluded with respect to computation of limitation. Other cases, the date of service of intimation. Very important, service of notice is there in section 282. 282 further paves way for rule number 127. Very important for us to appreciate this particular section. A couple of months back, I had a very interesting client, a huge demand. He didn't want me to file an appeal. He came to me with a simple question: can I abscond? Can I go underground? Was the question. He says, whatever notice department sends, I am going to reject it. Can I change my address? Can I sell this property? Was the question which he had. I said, I am not the right person. Go up to some lawyer, some criminal lawyer. So the addresses which a department can access is something which is there in Rule 127. It is to serve notices, summons, requisition, order and other communication. The first on the list is address as available in the PAN database. You might still wonder as to why notice is going to that location. It is because PAN database. When did you apply for PAN? 20-30 years back. The second address they can tap is address which is there in the latest, in the income tax return to which the communication relates. Assessment is 1780 that year. If it is not there, department can resort to the address which is there in the last income tax return. The third point. The next point, if it is a company, whatever is there in the MCA. There can be an instance, if you get notices to some other location, you can specifically write to assessing officer asking him to specifically deliver the communication to a particular address which is there in the proviso. If none of these addresses are there before the officer, they can go one step ahead. They can approach your banker. Clause 1 is banker, clause 2 is postmaster, clause 3 is insurer, clause 4 is form 61. We all know what is form 61. Form 61A. Last but one is dealing with records as available with government. Last one is dealing with local authority. With respect to email communications, department can tap whatever is the address which is mentioned in the income tax return that year, latest year, MCA and income tax authority or person authorized by income tax. The date of service, the nice question which I have in the first instance is an order which is being prepared by assessing officer. Now we have something called as e-proceedings. Go to income tax website portal, e-proceedings. Orders diligently uploaded by income tax officers in e-proceedings. Can it be a proper service? Is it a proper service? No. Whatever is uploaded there is further triggered by some sort of email communication, some sort of SMS is also sent to clients. Is it a proper service? My humble opinion,
Yes.
could be controversial opinion. Yes, it is a proper service. That dedicated space, even Gmail is my dedicated space. Similarly, a portal on income tax is also my dedicated space. As per section 13 of Information Technology Act, read with Rule 127, further read with section 282. It is a proper service if it is uploaded on your portal. How different is it from email communication? How different is it? Email also you enter your username, login, and now it is a click of a button. Income tax portal is also like that. Enter your username, password, go and access your emails there. It is a proper service, but anyway, thankfully they are also sending email and SMS. Nothing much to discuss here. Section 268 in the last instance, the date on which you receive an order, should it be counted for counting the limitation? The answer is there in section 249 subsection 2, as well as the answer is there in section 268. The date on which you receive the order should not be counted. and whatever is the time spent in obtaining a certified copy. So your question, certified copy is excluded here. Condemnation of delay, birthright has been given to you by way of section 246. The moment you get an order, you can file an appeal. That right has been converted, will get converted to some sort of discretion. CIT may or may not entertain your appeal if there is a delay. The provisions dealing with condemnation of delay is there in section 249 subsection 3. Delay can be condoned only if there is a sufficient cause. What can be a sufficient cause? Set up a few examples here. Litigation was conscious of his rights. He has taken appropriate steps to ensure that some appeal mechanism has been invoked. Circumstances beyond the control of assessee like ill health, death of a relative, curfew, whatnot. Some bona fide reason, wrong advice, genuine difference of opinion, or even a postal delay can be a good cause for not filing an appeal. What is not a good cause is listed on this slide. It is completely factual. Just ensure that the client does not sleep over it. As long as he is taking some action which is genuine, condemnation can be done even if there is a very huge delay. Even if a delay is small, if it can be attributed to negligence of the assessee, the appeal may be rejected on technical grounds. That's the summary of this slide. A very landmark ruling. Every time I draft a condemnation petition or a written submission supporting my delay, I cite this ruling. Every point of this particular ruling is of importance. Every point of this. The first one states the litigant does not stand to benefit by lodging an appeal belatedly. The presumption is he has acted in a bona fide manner. Let me admit appeal and decide on merits rather than dismissing it. That's also the second point. Refusing to condone the delay can result in meritorious matter being thrown out at the very threshold. The third point is of importance. As against this, what is the best? If I condone the delay as a CIT, if I condone the delay, what is the best assessee gets? Assessee at the max, he is decided on merits. Either it can be in favor of assessee or against assessee, but at the end of the day, it is decided on merits. There was a Supreme Court ruling stating that every day's delay has to be explained. Every day's delay. Nice counter by Supreme Court again. The ruling corrector, land acquisition versus Katiji. Why not every hour? Why not every second? That kind of approach should not be adopted. It's a humble opinion. Can't concur more. Can't agree more. Anyway, end of the day, substantial justice and technical considerations are pitted against each other. Always prefer substantial justice, not technical considerations. Few more nice observations by Supreme Court. Pass on this PPT. Condemnation, few more case laws have been referred. It is always end of the day fact specific. I want you all to refer to the second case law. Very nice case law. Second case law. Assessees who are a rebel. Assessees, the moment they see a postmaster trying to deliver a post, he refused it. The refusal is also counted as service. Limitation starts from the day he refused. The last one can be of use. Assessees, they get a demand notice, they file a rectification application. They should have ideally filed an appeal, but they were pursuing something called as alternate remedy, which is rectification. Rectification applications, assessing officer not attending it in time. The limitation given in the Act is 6 months from the end of the month in which rectification application has been filed. In my 10 years of litigation practice, I have not seen even a single assessing officer passing a rectification order in 6 months. So 6 months is wasted there. Now you want to file an appeal before commissioner, you can always cite that I had approached assessing officer with rectification because it was not done. This is a reasonable cause for me to belatedly file an appeal. Kindly accept the appeal. Members, a lot of notices, a lot of orders being passed under section 144, where assessees have not filed return of income. Property transactions. They have undertaken a purchase of property. Department diligently sends a notice. your income does not support, or maybe you have not filed an income tax return, right? You have purchased a property and making addition of 60 lakh rupees because it's the cost of purchase. Return of income has not been filed. I have diligently filed an appeal before CIT. While filling form 35, there was this particular which required me to throw light on compliances made by filing return of income. I said, IT, assessee has not filed return of income. Neither under section 139.1 nor under section 139.4, 5, 139.8A, 148. None of the notices have been responded. Returns have not been filed. The next question which is there in form 35 is whether admitted taxes have been paid. It's a property purchase. It's not a property sale. There is no question of paying any taxes. Apart from this, no other transaction. So I mentioned no in form 35. Return of income has not been filed, nor admitted taxes have been paid. So I filed an appeal diligently before CIT. A notice was issued on 24th September 2023. I requested the concerned chartered accountant to help me with the statement of total income. No matter what it is, help me with statement of total income. He was a little busy with reasons best known to everybody. September 24th. So I sought 1 week's time. September 26th was the hearing. September 23 was the date of notice. September 26th was the hearing. September 27, despite the fact that I filed adjournment, 27 I get a order with the addition of 24 crores being upheld by CIT, stating that you have not filed return of income nor paid admitted taxes. The section that was invoked is this section, where the return of income has been filed. When you are knocking the doors of CIT, the least you are expected to do is to pay the taxes. At least the taxes as determined by assessee himself in the return of income. That is the first clause. There is no exception. You file the return of income, you pay the taxes. Otherwise, you don't come to CIT. The second instance is if you don't file the return of income, the option that you have as an assessee is prepare the statement of total income. If at all there is advance tax to be paid, pay it. For various reasons, if you are not able to pay the advance tax, file a petition before CIT explaining the reason as to why you are not able to pay. CIT, if he considers it as a good and sufficient reason, he can exempt you from paying admitted taxes. CIT will stage. Am I clear with this? Return of income, no exception. It is there only for cases where return of income has not been filed. So in my case where the appeal is dismissed, let us assume that client is required to pay some taxes. Not file return of income, he is required to pay some taxes. I can go to ITAT. By the time ITAT takes up my case for hearing, I can pay the admitted tax and request ITAT to remand the matter back to the file of Commission of Income Tax Appeals. It is possible. Again, a lot of efforts wasted in litigation, but this section can be cured. Bear in mind, even if CIT dismisses this particular appeal on technical grounds by invoking section 249 subsection 4, it can still be cured, members. A lot of case laws in support of assessment can be referred. The question to the learned audience is, I get a penalty order under section 270 capital A. Same case, same facts, I am required to pay admitted tax, I am not paid. Assessment order is passed, I ignore assessment order, but I file appeal only against penalty. Can CIT compel me to comply with provisions of section 249 subsection 4? It is not appeal against assessment order, it is appeal against penalty. As long as penalties with respect to an addition, as long as penalties with respect to returned income, CIT can still ask you to comply with section 249 subsection 4. If it is not connected to assessed income, if it is not connected to returned income, example is 271D, violation of section 269 SS. In that case, assessing officer or CIT cannot compel you to comply with section 249 subsection 4. Very nice Karnataka High Court ruling, my friends. ITR 231 ITR. I filed a return of income under a mistaken belief. I was supposed to pay taxes. There was a popular trend back in those days. You file a return of income, fill dummy challan particulars, approach banker for a loan, and afterwards, if possible, file reverse return of income. If you forget, this case law will come to your rescue. You can always make a case that you are not liable to pay taxes at all, and therefore assessee has not paid admitted taxes. You can still get your appeal admitted. Two more sections I'll be pretty much done. Section 250, again dealing with procedural matters. Subsection 1 is dealing with issue of hearing notices. Of late, we are getting a very unique notice called as enablement notice. Nothing is there in the notice, 2 words. The communication window is enabled. What is that you do? Is it counted as a hearing notice? Department at least should mention as to what is that we can do with respect to that notice. Probably there was a case filed before Madras High Court stating that there is an option for me to file a stay petition before CIT. How do I do that? In a faceless era where you filed an appeal, you not got a hearing notice. Hearing notice is likely to be issued after 4 years. Huge pile of cases. Now either to file a stay petition before CIT appeals, or to file an early hearing petition before CIT appeals, or to file a written submissions in first instance. How do I do that? Probably maybe department considering this has by default, the moment you file an appeal, next month first day you get something called as enablement notice. Without anything, this notice cannot be counted as a hearing notice because a hearing notice has to have date, time, place. So there was an instance where we got 3 notices. First is in the year 2021. CIT notice which was running to 4 pages. First 2 pages it was Vivad se Vishwas. And for the sake of it, some date was given, some time was given. Assessee was asked to file written submissions. Because it was wholesale, all the appeals which were filed before CIT, they ended up issuing this notice, not with an intention to hear the matter. Even if you prepare your case, go to CIT. Back in those days, CIT says, approach assessing officer, prefer VSPS. Don't come to me with a submission. This was the approach back then. And then we got a enablement notice. And now we got, in the year 2023, third hearing notice, which is actually a proper hearing notice. None of the notices were responded. The CIT, while passing in the faceless manner, said 3 notices were issued. One was VSPS 2021, second was enablement notice, some year 2022, and third is hearing notice in the year 2023. Said 3 years, assessee has not filed a response. Rejected my appeal. It was very convenient and easy for me to approach ITAT and say that the first 2 notices cannot be considered as hearing notices. Effectively, CIT has given only 1 hearing, and assessee has stumbled. Assessee has not replied, but don't be so brutal to the assessee. Give another opportunity. The matter was remanded back. As per law, a notice is also required to be given to the assessing officer. Subsection 2, right to be heard, is given to the assessee as well as assessing officer. Subsection 3 is dealing with adjournments. Subsection 4 is very important. Further inquiry can be caused by the CIT appeals. Subsection 5, additional grounds, will deal with it. Speaking order will deal with it. 6A is time limit to pass an order by JCIT or CIT appeals. As per Income Tax Act, Section 250, subsection 6A, an appeal has to be disposed 1 year or rather 12 months from the end of the year in which appeal has been filed. Has to be disposed, but it has been interpreted as directive in nature. It is not compulsory. Assume a case where appeal is being disposed after 4 years. Can you say that this is bad in law? No assessee would raise a ground. When appeal is disposed after 4 years, no assessee would say that this is bad in law. Only to do what? Only to file an appeal again before CIT. 6B, 6C, and 6D is dealing with faceless CIT. More importantly, whatever is there after faceless CIT is important. Certain jurisdictional and procedural matters which are covered herewith can be diluted by the CBDT while issuing notice under faceless regime. I repeat this, the sections which we are dealing today, whatever procedure, whatever legal aspects have been referred here, can be diluted by the CBDT while issuing faceless notification. So certain rights are taken away, can be taken away by the faceless regime. Last one is subsection 7, whatever order has been passed has to be communicated. CIT can cause further inquiry. This is the most important section, members, of my presentation. I straight away jump to whatever is there in the box in the interest of time. CIT is called as quasi-judicial authority. When you file an appeal, you file an appeal to determine the correctness of the assessment order. CIT cannot stop there. CIT has to also consider the correctness of the tax liability in the first instance. To determine the correctness of the tax liability, CIT can cause further inquiry. This is the power which is being shared by CIT is very similar to the power which is also available to the assessing officer. There are instances where now we have limited scrutiny. Now we have 143(1) where the scope of assessment to the officer is very limited. Now when I approach a CIT appeals against a limited scrutiny order, can CIT appeals go beyond limited scrutiny? The answer is no. Whatever power is shared by the assessing officer, the same power can also be enjoyed by the CIT, not beyond it. It is not akin to section rule 46A. We will discuss rule 46A down the line. And power to inquire also is power to admit additional evidence, the most important. Otherwise, if I have to file any additional evidence, I have to beg by filing a petition for additional evidence. But if CIT is specifically asking me to bring a document without filing additional evidence petition, I can casually go to CIT and submit the documents over the counter. We will discuss that in greater detail down the line. The request may flow from the assessing officer as well. The request for what? Request for further inquiry can come from the assessing officer. He having committed mistake, after he realizes it, he can request Commissioner of Appeals, if the appeal is pending for CIT, to cause further inquiry. And he can also request assessing officer. CIT can request assessing officer to do some inquiry and report it back in the form of remand report. This power is also there. Subsection 5, members. Subsection 5 is dealing with additional ground. What is additional ground? A ground which is not there in Form 35. The courts have been very kind. We have a very landmark ruling in the case of Jute Corporation 187 ITR. Even the CITs have been very kind. Whatever ground has not been raised, do consider raising it before CIT. At least in the grounds of appeal that you prepare, the last sentence usually, in most cases, says I may be permitted to file additional grounds during the course of CIT proceedings. This is of importance. Fresh claim which has not been made in the return of income. Fresh claim which has not been made before the assessing officer. Can I make it for the first time before CIT, please? Is the question. We have a lot of litigations, not just in the Income Tax Act 1961, even otherwise. Fresh claim can be easily admitted by CIT for the first time, provided grounds, provided records are already there. The details are already there on the records. We have Gokul Das exports. We have Jute Corporation can also come to a rescue. There is a landmark Supreme Court ruling in the case of Poets 284 ITR, wherein restriction has been placed on assessing officer. If you are making a fresh claim before assessing officer, it cannot be done otherwise than by filing return of income. But that bar is not there on the appellate authorities. So before the appellate authorities, you are free to raise additional claims. This can be kept in mind to file appeals before higher authorities. Subsection 6, it says a speaking order has to be passed. What has been highlighted in the employment extract which is there, it is compulsory. CIT shall pass an order in writing and shall state the points for determination, the decision thereon and the reason for decision. CIT cannot say that I agree with the assessing officer. CIT cannot say that assessee's submissions are rejected. assessee has not produced supporting evidence, rejected. Casualness cannot be adopted. He has to better pass a speaking order with reasons, with points for determination, with the decision also. Decision anyway, it will be there in all cases. The second point on the slide, dear members, multiple CIT hearing notices have been issued. Can CIT just dismiss an appeal stating that none appeared, I will not entertain the appeal? Assessee is not interested in getting the matter heard. Assessee has not appeared despite issuing 10 show cause notices, 10 hearing notices. So I will not adjudicate on merits. Can I dismiss it without looking into the merits? If you get a CIT order stating that the appeal is dismissed for non-prosecution, none appeared, within a minute you can get a relief from ITT. It is mandatory on CIT to entertain the appeal on merits. Whatever is there on record, he can cause further inquiry, he can ask assessing officer to submit a remand report. Whatever is there already before the assessing officer, he can look into that and pass an order. It has to be a reasoned order, it has to be an order on merits. We should also consider our grounds. Powers of CIT, the last section which I am going to deal today, section 251. The only thing which has been highlighted in red can be emphasized, which was the first thing I highlighted when dealing with my slides. The CIT has powers to enhance. CIT has powers to enhance an assessment. He can confirm whatever has been done by the assessing officer. He can reduce the impact of the assessment order. He can enhance, or he can annul, cancel the order altogether. Powers are shared by both CIT as well as JCA, but for the content which is not in bold. This is just an extract of section. I have dealt with it in greater detail in subsequent slides. This is a summary of powers of CIT to enhance. After 1/4/1998, CIT lost powers to remand back the matter to assessing officer. CIT lost powers to set aside an assessment order back to the file of assessing officer. Today, CIT, all that he can do is ask assessing officer to cause further inquiry and give a remand report back to the CIT. It is the CIT who has to pass an order under section 2. He cannot send it back to the assessing officer. When it comes to enhancement, it is very wide in scope, members. Very wide in scope. But luckily, there are certain reasonable restrictions, well-defined limits placed on CIT appeals. Starting off with the first point, no addition in respect of source of income, neither disclosed in the return of income nor entertained by the assessing officer during the assessment. Two important things. It is not there in the return of income, as well as assessing officer has not caused any inquiry. For example, agriculture income has been disclosed in the return of income, and assessing officer has not asked even a single question on agriculture income. He has passed an order, maybe for business income, making some certain additions under section 43B as an example. Now we are an appeal before CIT against this addition under section 43B. Can CIT undertake an enhancement with respect to agriculture income by treating agriculture income as undisclosed income under section 68? Or maybe 69, or maybe 69 capital A. The question is to the audience, can we do that? See, return of income is a very important document. If it is there in return of income, he can do it, though not subject matter of assessment. But a company which has prepared a balance sheet, for example, a 300 crores company, anything and everything will be there in the balance sheet. Now, for example, the same agriculture income is there in the balance sheet. An addition has been made to section 43B. Can now CIT do enhancement on agriculture income? The answer is no. So basically, balance sheet will have anything and everything. Just bear in mind that if it is subject matter of assessment, even if one question has been asked by assessing officer on agriculture income, then CIT can definitely do enhancement on this. Again, limited cases where it is a case of limited scrutiny or otherwise, CIT cannot travel beyond the jurisdiction which is available to the assessing officer. The last one, power of CIT cannot be interfered by the CBDT. No order, direction or instruction can be given by CBDT which can interfere with the discretion available to the CIT, because CIT is a quasi-judicial authority. Couple of case laws again of a lot of importance. I'm afraid if I deal with it in greater detail. The last one is of importance. The power of CIT appeals are indeed very wide, but as wide as they are, they do not go to the extent of displacing powers under section 147 and 263. If there is any escapement which has not been subject matter of assessment, if there is any escapement which requires enhancement and it's not there in the return of income, department can resort to section 147, income escapement. Department can maybe play with section 263, but enhancement is not the way. Enhancement is not the way out. Again, a very landmark ruling as to with respect to dealing with the powers of CIT with respect to the scope of enhancement. Few more rulings should definitely bear in mind. I was dealing with one instance where a trust which is enjoying benefit of FCRA has prepared two set of financial statements based on FCRA funds. This particular trust has disclosed the travel expenditure. If it is funded by FCRA funds, they have disclosed it as foreign travel expenditure. If it is funded by Indian donations, they have disclosed it as domestic travel in the ITR. So the obvious question by the assessing authority is charitable activity has to be conducted in India. 7 lakh is the travel expenditure in India and 90 lakh is the travel expenditure outside India. Question naturally came during the course of assessment proceedings. No matter what explanation we submitted, assessment was done face as manner. We went to CIT, limited question. He explained genuinely, saying that he is out of FCRA funds, that way it is wrongly disclosed like that, but everything end of the day is Indian travel expenditure. CIT was convinced. We were very confident that it is going to be a favorable assessment order and CIT order. But CIT went a step beyond. CIT has given us an enhancement notice as to why section 12A registration should not be cancelled for various reasons. That is when this case was will come to your rescue. The scope before the assessing officer was a limited scrutiny. It was limited to examining travel expenditure. Only that can be litigated and not the validity of the 12A registration. The last important point of my presentation, members, is additional evidence. An order passed under section 144 without any submission before the assessing officer. Now, client comes to us asking him to represent before CIT. I collect all documents and I approach CIT, prepare a nice submission, file all annexes before CIT. CIT can dismiss all my submissions by citing this particular provision. Rule 46A of Income Tax Act dealing with additional evidence. What has not been submitted before assessing officer cannot be casually submitted before assessing officer unless these 4 conditions are satisfied. Either of the 4 conditions, any of the 4 conditions. The first one there is where an assessing officer has refused to admit additional evidence which ought to have been admitted. You submit something before assessing officer is not considered it at all. This can be subject matter of additional evidence. This can be admitted by CIT. The second instance is where the appellant was prevented by sufficient cause from producing the evidence which he was called upon to produce by the assessing officer. Assessing officer has requested you went to sub-registrar office requesting for details of guidance value. They took 2 months by the time assessment order has been passed. This can be a sufficient cause under clause B. Third instance is, let me know the difference between second and third. Third instance is where the appellant was prevented by sufficient cause from producing before the assessing officer any evidence which is relevant to any ground of appeal. What do you think is the difference? B and C. Clause B is, yes please.
Application, the assessing officer is calling for investigation, the assessing preparing submission.
Yeah. In clause B, assessing officer has specifically asked you to submit something. Clause C, you raise the ground, you want to support the ground, which you are not able to submit before assessing officer, you have to explain. The last one is the order has been passed by the assessing officer without a reasonable opportunity of being heard. Only in these cases, you have to file an application for admission of additional evidence, supported by an affidavit as to why you did not submit documents before assessing officer. Only then you get a right to submit documents before a CIT case. And CIT under subsection 2, before admitting the documents, he has to record the reasons. And that is not enough. The moment he admits a document, he has to send it to assessing officer for his comments. Faceless appeal, I have got a couple of charts. End of the day, it is very procedural, members. In the interest of time, let's see if we can deal with it. I file an appeal before CIT and I am not interested to pursue it. Can I withdraw it?
Yes.
Answer is no. There is no provision under the Income Tax Act to withdraw an appeal. But the CITs have been very kind. You can only state that you are not keen on pressing a ground. Why is withdrawal not permitted? Any answers? The logical reason. CIT is a quasi-judicial authority. One is he has to revise, he has to revisit the assessment order. The second duty which is cast upon CIT is to determine the correctness of taxes paid by the SCM. For that he can cause further inquiry up to which section? Section 250 subsection 4. So this is not the only duty. You also have to cause further inquiry, determine the correctness of the taxes paid by the SCM. He's got powers to enhance. Just when you realize that he's going to do enhancement, can you withdraw an appeal? No. Because assessing officer does not have powers to file an appeal against his own order before CIT. This power has been given to CIT. Last sentence is something which I found noteworthy. A public process directed to public ends cannot be stopped at the option of an assessee. It is possible with the consent of a CIT, but again I am reminded of section 250 subsection 6. 250 subsection 6 requires me to pass a reasoned order, points of determination, along with a decision. He cannot dismiss an appeal on ex parte basis. Yes, members? Before going for CIT appeal, there are also options which you can explore before High Court. A writ can be considered. High Court has an option to exercise a discretion whether to entertain your writ or not, which can be entertained provided 4 conditions in my humble opinion. When there is some need for enforcement of fundamental rights, when there is a violation of principles of natural justice, when the order is wholly without jurisdiction, instead of wasting time before CIT, then going to ITAT and then going to High Court, the moment you get an assessment order, directly approach High Court. When you are challenging the legislation itself, CIT versus CIT, I am comparing CIT with CIT appeals. There is also an option for assessee to file a petition under section 264. Can be preferred in straightforward cases wherever there is an error committed by the assessing officer. Can also be considered for new claims, can also be considered for finding fresh evidence. But do bear in mind that the order under section 264 is not appealable. Order under section 264 can be challenged only by way of writ, and both are mutually exclusive. You cannot file an appeal, also file a 264. You cannot file 264 and file an appeal. Both are exclusive. Choose between the two. Rectification is better than CIT in some cases. If it is a mistake apparent from record, computational errors, straightforward cases, instead of adding 5 lakh rupees, is added 50 lakh rupees. Don't go to CIT and get yourself exposed. Don't go to CIT appeals, rather file a rectification application. DRP as an option can also be considered in cases where an eligible assessee suffers addition. Eligible assessee, who can be eligible assessee for DRP? A foreign company, a non-resident, or an assessee who has suffered a TP addition. In that case, they cannot directly pass a final assessment order. They have to first issue a draft assessment order, which can be subject matter of objections before DRP. Once DRP gives the directions to assessing officer, it then becomes a final assessment order, which can be appealed directly before ITAT, not before CIT. The advantages of DRP over ITAT is in DRP there is no pressure of demand recovery. And the faster approach to ITAT is the advantage. This is the most important. I'm sure many members will be interested on this. Unlike indirect taxes, I'm not exposed to indirect taxes, I cannot comment much on that. At least when it comes to income tax, all that you're required to pay before filing an appeal is appeal filing fees of 1,000 rupees maximum. There is no requirement. Many CAs, many professionals are of the opinion that 20% of the demand has to be paid. It is not the case. In almost 90 out of 100 appeals that you have filed, you have not paid 20% of the disputed demand. You filed a petition before assessing officer. Assessing officer in a very diligent manner, he rejects our stay application, citing CBDT memorandum, which is being referred here in the next slide. So assessing officer rejects my stay application, requesting 20% of the disputed demand. He also gives a lot of threatening messages in the end, stating that if not paid, coercive measures can be initiated. Bank may be attached without further notices, whatnot. Against which diligently by and large the same stay petition is also filed before PCIT. And PCIT so far have been very kind. Kind in two terms. Kind in not hearing my stay application at all, which is deemed to be a stay. Kind in on merits also. PCITs are very reasonable. They also have powers to defy the CBDT memorandum, requesting 15 or 20% of the disputed demand. By and large, there are cases where PCITs have rejected my stay application without hearing me, against which I filed a stay application before CIT appeals. I dealt with section 246 to section 251. Not even once I mentioned that CIT appeals has power to entertain a stay application. But the interpretation of the courts, one which is referred here, several high courts are of the opinion that CIT appeals also enjoy or maybe they also have the right to grant a stay. So I have bought some more time by filing stay applications before CIT appeals. Against what? Against that very nice notice called as enablement notice, not what a hearing notice. So again, CIT appeals luckily have not responded. Until the stay application is rejected by CIT, assessing officer cannot proceed ahead with bank attachment or anything like that. One more important circular instruction given by the department is something to be appreciated. The Deputy Prime Minister back in the year 1969 has made an observation: if it is a high-pitched demand, it should not be collected. If it is high-pitched demand, it should not be collected. This circular can also be used to your advantage. The last slide of my presentation, monetary limits. Why will this matter? I got a favorable order from CIT. Can a department file an appeal before ITAT? Department can definitely file an appeal before ITAT, provided the tax effect is more than 50 lakhs. Otherwise, they cannot file. Again, High Court, it is 1 crore. Again, before Supreme Court, department can do that only if the tax effect is more than 2 crore. This has by and large ensured that all the CIT orders are adverse. Because the monetary limit is like this. Anyway, this is just my subjective opinion. I used a lot of books to prepare this presentation. I'm very thankful to all the mentors, thankful to all the books that have come to my rescue. One thing which I'm not touching upon is faceless appeals. I may be pardoned in the interest of time. Faceless appeal is a very procedural thing. You can always refer to this document, a notification notifying faceless appeal scheme, which is just running into 9 pages. One read is enough. It is more of a football. The moment you file an appeal, they have to issue a notice, then it goes to assessing officer, demand report, very procedural in nature. With this, I would like to conclude my presentation. Any questions? I am here. Thank you.
Sir, in case of press race, now if the hearing is not coming, what can we do?
The enablement notice. In all cases, enablement notice is issued.
Yeah, enable notice.
File an early hearing petition. If that is not enough, you can also approach PCIT, judicial PCIT. File an early hearing petition. More likely than not, you will get it. Or a DGIT investigation can also be considered. Thank you.
Members, provisions with the one page in Income Tax Act 1961, which has led to huge additions by officers, such as that draconian provision, which was discussed in the beginning. Is it the birthright of the aggrieved to file appeal with CIT appeals for any and every case? Which provisions under the law provides us the right to appeal need to be properly checked. What are the powers of JCIT appeals or CIT appeals? And after all, what are the professional opportunities in this field for a chartered accountant who has appeals to be filed for his own clients or otherwise? And provisions and procedures and caveats in dealing with this subject was very well dwelt upon by CA Siddesh. A round of applause for that fantastic session. Thank you, sir. On behalf of members present here and all the managing committee members of Bangalore branch, I would like to hand over my memento as a token of gratitude and respect. Can I request CA Vinay Kulkarni, sir, to come out to dais and then do the honors?